Testing 1 2, testing 1 2. Let's get the microphone tests out of the way here, or check rather. Let me know if you can hear me across the various chats in the internet land out there. We've got a few different streams going on today, and trying out a few different things as well with one of them. So go ahead and let me know if you guys can hear me, including those of you who are idling over in YouTube. There's only one in the chat I see. Hello, Bobby. But there is quite a few over there. If you would like to chat, go ahead and hit subscribe on the channel and you can jump right into the chat. Let me know if you can hear me okay. And we're going to get rolling here in just a few seconds. Okay, so it looks like the audio sounds good. Thank you all for letting me know. All right, let's go ahead and get the music under control here. And we're going to jump right into some technical analysis here. Hello and welcome to Landy's Crypto Corner and our Macro Monday live stream. Today is October 30th, 2023, and this is the stream where we take a look at the longer term timeframes and weave that into our daily analysis. And we're going to start with Bitcoin today. We are not actually going to look at the 15-minute because that's not very macro. We're going to look at our Bitcoin in 60 seconds chart to start, and we are going to zoom out a little bit here to the monthly. Now you can see that I have a bunch of support and resistance on the chart here. Let's go ahead and see if we can't get rid of some of that. All right. And we're looking at the monthly. Monthly is currently trading above the upper first standard deviation of the Bollinger Bands. That is a good thing for the bulls. So if this can close up here by the end of tomorrow's session, and that number is going to be 33, we'll call it 600. It's 33,576, but 33,500 to 600 is kind of the area for Bitcoin to hold and close above. If it can close above there, that will open up the upper second standard deviation of the Bollinger Bands, which is currently coming in at around 40,650. Now, one of two things is going to happen if this does close above the upper first. Either the upper second standard deviation is going to continue its downward trajectory towards price and likely end up somewhere around this low on a close at 38,500 or so, or it's going to flatten out and stay at around $40,000. Now, this actually ties in pretty well with our daily analysis for where Bitcoin is currently trading. So if we drop back to the daily time frame, and we look at what some of the upside targets are here just for bands at first, you can see that the upper second standard deviation is currently coming in at 36.6, and the upper third is up there around $40,000 at just under 39.7. The upper first is also at the bottom side of the range on a close, right around 33,577, 33.6. So the criteria would be for today and tomorrow for Bitcoin to hold that upper first on the monthly and upper first on the daily. If we do start seeing that lost, I would look for a bit of a pullback, but we'll talk about that in just a moment, kind of the areas of interest to the downside. I'm going to tell you right now, I am looking all over the YouTubes and the crypto Twitters and all the popular places for people to give their, in many cases, not very technically sound opinions about price action. And I want to call your attention to the weekly real quick here before we start moving into the bulk of the analysis with areas of interest to watch for. But this was a pretty big consolidation, right? So when price finally touched off and closed on the weekly at around $28,000, excuse me, hopefully I'll grow a little bit more here. Maybe that time's passed. But you can see that even the week after, if you take the week after to the week prior to the breakout, you've got 210 days of consolidation. All right, this breakout is fresh, it's new, it's real, and looking for absurdly low targets past anywhere past the most recent lows is really just silly right now. Now, I will tell you that if Bitcoin does break back into the closing structure here and head towards the basis, then we're not looking for immediate continuation, but it's also not immediately a death sentence for Bitcoin's price. And even if we did see the lows drop at some point, which I highly doubt is going to happen from here. In fact, I will give you my personal opinion. I'm going to back it up with the analysis here in a moment, but my personal opinion is that we see some consolidation to continuation, right? And that means continuation to the upside. Now, that's not a guaranteed, but a much higher likelihood is what is being painted right now. If we ever did see this 24,900 area breached again, then I would be looking somewhere around the lows, right? The major low that is now looking to be confirmed when we go and flip back to the monthly as a macro low. What is the criteria for confirming the bottom as a macro low and not a major low? Well, we need higher low structure on a close. That's the way that I've always measured it, and it has never failed me. In this case, we had lower high over here in March of 2022. We had lower low come in December of 2022. We had a lower high come in June to July of 23, and we're looking to confirm a higher low. Now, that higher low is not only is this going to be a structure break, meaning we're breaking the downtrend. So the only thing that can happen from here is a higher high on the monthly. But we've also set a higher low. We set the major low. Once you get another major low, the low before it becomes a macro low. All right, that is how that is measured. There is a little bit of variance in there. If you want to take wicks, you can throw on a swing indicator, and you could make the argument it's not actually not on this chart. We'll go over to a different chart that the swing indicator would be on. Let's go ahead and get rid of this, and we're going to keep Bollinger Bands. And we can go ahead and look at a swing indicator, and there is an argument to be made that we already saw the macro low confirmed on the higher low, higher high in a wick. I don't take wicks, I take closes, because price must close in order to advance, even if it's on a wick basis after the advance. All right, so that is very important to understand because Bitcoin and assets and indices, they need to take out a high or a low wick on a close in order to get that bias that you're going to go further in that direction, even if it is just momentarily. All right, if that makes sense, let me know. But in this case, there's many that were already arguing that no, this was the higher low, this was the higher high break. We got another higher low on the wick, and then we have a higher high. And they're not incorrect. I prefer to see closes. That is how I measure major and macro tops and bottoms. And in this case, there's a lot of really people are hunting for the bearish sentiment. And I'm sorry, all you got to do is look at the monthly. That's not a bearish candle, even if it puts in a top here. That's not a bearish candle. We're building structure on the monthly, and it looks fine. Now, until something major breaks, we see one of these lows passed on a wick and it breaks down and closes below there on the monthly, then we can entertain a wider pullback, maybe go and retest them now macro low. I highly doubt that Bitcoin's going to dump out and go back into range by tomorrow, but you never know. If it does bearishly reclaim this at 31.8, then, there's a different conversation to be had. Now, that's not out of the question, so it could happen. And if it does, we're going to be having a different conversation. Then it is pretty bearish, but it's not. It's wishful thinking at this point to start calling for some of the really bearish targets that people are calling for from here. I think that those that are got really bearish when things were at the lows here, it didn't go their way, and they've failed to adjust for that, and now they're coming up with reasons for why it's still bearish. And you got to take what's in front of you. You can't take what you want to see. And I think it's foolish to project too far out. That's one of the reasons why I have Bitcoin in 60 seconds videos that literally track daily price targets. And those price targets can expand and shrink based on Bollinger Band volatility when we're looking at the daily. So, there is, we're in a very high volatility environment right now with Bitcoin. So, if it does lose that upper first at 33,500 or so, 33.6, the basis band is coming in just above the breakout level now at around 30,005 to 600. Now, I would argue that that is right where Bitcoin needs to start putting in a low if it were to pull back there. So if we go to the Bitcoin in 60 seconds charts and get into some of the target analysis here, we can see that just overhead of price, we have our main targets that we were just talking about. Of course, the monthly targets here. If Bitcoin can start to break up further, we would have to see Bitcoin start closing above the wick highs here at around 35,147. Take out that monthly on a close at 35,000 or so to go test the weekly overhead at 36.2 by the upper second there at 36.7 or so. And then above there, there's another weekly. It is an important weekly around 37.7, and then just above it is the monthly at 38.5. So that's one of the bigger targets to the upside, where I do believe if we see this scenario where where monthly Bollinger Bands continue down from the upper second standard deviation side of things, if it does continue down a bit here for another tick, I do think it's going to end up somewhere around this 38.5 area. Now, it's currently at the $40,000 level, so we can see above that 38.5 monthly, there is a weekly here, and that's coming in at $39,000 even. And then just above that is another weekly coming in at 41.8. And you can see that the upper third, and I've been calling this out as $39,000 to $40,000 because there are some exchanges that closed this weekly at around at closer to $40,000. So 39 to 40 is the upper end of the target. So if Bitcoin does get a leg up into this area up here, I do suspect that it's going to take some time to cool down if it doesn't do that before then, meaning cool down in the current range that it's in, where, to be fair, it has been consolidating a bit. Although it could go on for a bit longer. I would not be surprised to see that. So we are coming into what I have talked to many of you about for a very, very long time, and that is, do not, under any circumstances, fail to change the way you were thinking. If you were, because we were in a range for so long and in consolidation for so long, it is an adjustment period when those ranges break, either to go on a run, right? And then you don't want to fight a run, either to the upside or downside. If you're getting in the way of it, you're probably going to get wrecked. You want to trade with the trend on the higher term time frames. The lower term time frames are probably going to get burnt up to a crisp, just like they did on all the downside moves. So it's about the higher term time frames. And when we look at the monthly here, we can see that Stochastic momentum is at $23,000, which just happens to be a monthly close open as well. And I had mentioned that we see that Bitcoin is kind of stuck in this big range. We've got 23,300 down here. And prior to setting that monthly at $26,000, it was basically 23,000 to 35,000. Big ranges. Now we're in a little bit more of a condensed range when looking at monthly closes. We've got 35,000 to the upside until that breaks, of course. And then we've got $26,000 to the downside here. That's going to be, there's 27.2 32 and 26K. I'd argue that 26K is the bigger level there if you're going to be taking monthlies here. So if we were going to look at that, you can argue I'd say $26,000 because this was more of a consolidation area close open at 27,200, whereas the actual close open down here is at that $26,000. And then we've got the low up here on a close at 35 that's been tested over the past few dailies. So big range. When it breaks, we saw an intra-range break basically from the consolidation, which, there is monthlies here, right? So you can argue the 30,500 area is a monthly as well. But because it is in between some of the other swings, I haven't really called it out as a major significant level. And that's one of the reasons why when everyone was saying Bitcoin's going to stop at like 30,300 to 600, I was saying as soon as it gets through there, you're probably going to see an aggressive markup to 31.8. And then, of course, above there, 35,000. And that's exactly what we saw. It's not as significant a level because of the fact that it was in between some swings already in terms of the way that I mark things. It is a significant breakout because of the length of the consolidation, though. Now, how does this relate to what's going on in the daily? When we look at the daily, we can see that, we're about ready to see a bit of a downside signal on RSI here. Sorry, my brain went blank there for a moment. On RSI, it's about to cross under the moving average or it stays right there and the moving average continues up. That is not really a sell the peak signal, but it would signal that any type of divergence that now is built underneath of that moving average, which in order for it to build in trend bearish divergence right now, it needs to, either get a rundown to, a lower high on RSI, and I'm sorry, a higher high on RSI and a lower high on price action, or it needs to drive up for a higher high and on price action and a lower high on RSI. And in this case, it is kind of setting up to do that in terms of its consolidation structure that we'll revisit in just a moment. But this yellow line up here is the user alert level. That's 35,600. So I would beware of like the 35.5 region overhead. And that, of course, would be a higher high. And likely we see things push a little bit further. But, one of the things that I am going to point out here is there is a technical low that was set here on Sunday into Monday's candle, and then a back test of that candle. But this is simply a consolidation. So I also saw a lot of like, look, it's ready to break out. We got the higher low. It's got a range. If we do see, like 35.5, the wicks taken out 35.5, we could see a pop up to that upper second, somewhere around that 36,200 weekly to this upper second on the daily at 36.6. Very, very, very realistic. And then maybe a wider pullback from there. Now, if we do see the upper first dropped at 33,500 and specifically 33.4 on the wick, then I would look somewhere around the close open at around 33,000 to the wick low at 32.6 to 8. This is coming in at 32.8. Below there, what I would be looking for is the big area to the downside here. So if we see this wick right here dropped specifically, so if we see the upper first, start to get closed under, and this wick maintains on a closing basis on the daily here at 33,577, 33.6. Then it's looking good to keep testing further up. It's just within this range. If it does head down, there is support directly below at the daily at 32.4. Now, this is not recently tested support. This was kind of cut right through. So this is longer term support. There is a daily here that was an SR level in this case, so you want to see it tested as support, but there is room down to the daily, weekly, and monthly level at 31.8. Now, you're not seeing a lot of other people talk about this one. Instead, they're just focusing on like 32.5, Well, 32.4, that area is a big one, yes, but it has not been an area that's been recently tested as resistance and then needs to be tested as support. Its most recent test was like way back here as resistance on the daily over here, right? And prior on dailies, it was support. The area that was tested as resistance was 31.8 to 31.8 over here that was initially tested back in July. So it would be more logical to call this out as a zone, in my opinion. So give price some room if it does break down below 32.4 to that 31.8. And if that area breaks down, well, we've got those weeklies right there at 30,600 to 300. Daily basis band is coming in there as well. When looking at some of the Bollinger Bands, when going through that area around that 30,000, 3 to 6, we've got the basis band on the daily is there. We've got the 2-day is not even close yet. The 2 days actually upper first is at the $32,000 region. And we've got the 3-day. We've got just above it is the upper first. And we've got the basis band coming in right across these highs now at $28,000. Very good support there. 4-day, we've got the upper first at 30,400. So it's between those two weeklies at 30,300 to 600. And we see that the basis is creeping up to the ever important $28,000 level. The 5-day is at 28,500. We see that the 5-day upper first is at 30,600. Again, right at that weekly. And then we've got the weekly Bollinger Bands not quite in position for support and resistance, but they're at 31.4. And we've got the basis down there at just around $29,000. And then, of course, when looking at the more macro, 26,500 is the basis on the monthly. And, we've got that local range, 33.5 to 6. So right around where the upper first standard deviation of the daily is. So a lot of this is to point out that what we're looking for coming into the monthly is 33.5 to 6 close above for bullishness to go test further up in November. That does not mean that we don't see price head back down to some of those lower ranges and test. But if you do see that, one of the bigger areas on the monthly to watch out for on any rundown would be this 26,500. Now, this is the actual prior low. This is the higher low on the daily. So that is this area right here at 26,500. And we'll just get a new arrow here. This is directly at the basis band of the monthly, 26,500. So this higher low here. And beautiful structure. We've got, that downtrending structure. Continued down, we had another lower high, higher low, and then a trend break, higher high, higher low, and then right on up. And you might want to be aware of a pattern like this repeating as well, like what we saw on the initial run up to 28.6. Then, of course, once that was broken out above, off we went. Little pit stop at the weeklies there, and then as soon as those are broken, well, it went for it. And I would caution those who are really, really bearish about this particular move up right now. If you're looking for range scalps, great. Maybe a little bit of a range swing down to find support, great. But if you're looking further than that in terms of your projections for where price is going, you might want to reevaluate your thesis until you see something major breaking to the downside. Right now, it's a major breakout to the upside. Looks 100% real. This does not feel like a fake out, does not look like a fake out. It closed above the upper second standard deviation of the Bollinger Bands. There's no bearish divergence to speak of on the weekly here. There's the other thing is BBWP is just getting rolling on the weekly. And when all of your other indicators are saying like, no, the Stochastic is pointed down, and no, it put in a high, and no, it did this, it did that, you need to start looking at Bollinger Band volatility. And volatility can be charted in BBWP. So Bollinger Band volatility is the spread of the Bollinger Bands away from the basis. And closing above the upper second standard deviation here increases volatility quite a bit and typically leads to continuation, especially when you breach an area like a support and resistance level. Now, yes, it crashed right into a support resistance level at $35,000, but let's look at the weekly a little bit closer here. You can see that the weekly lows were actually a bit lower here. They were at around $31,000, and Bitcoin has yet to test the weekly overhead, which is where the upper third is coming in at 36,200. Go figure on the weekly here, I should say. And then just above that, there is 37.7. So 36,200, 37.7, and we've already seen a reclaim where price was getting rejected at 31.8, and the weeklies were coming in at 31,786. The monthly was coming in at 31.8 something. I think it was like 31,850. So this is legit, and it's getting expansion. This is not something that I suggest would be bearish. This is pretty darn bullish. And if it does take its time to consolidate and push on further, I would not see that as a bad thing either. I would actually see that as a very good thing. But this is the big one. When you're looking at volatility taking off like that, you got to pay attention. 2 week is also starting to show the etchings of volatility expansion. That is going to close with this week's candle. And you can see here, 31,170 is the momentum pivot. It's already crossed initially, and it's likely to complete that cross on burgeoning expansion of the 2 week chart. So, upper second standard deviation would be the criteria. So weekly closes above 33.2 would get continued expansion, likely into the further double digits for BBWP and probably hitting double digits for the simple moving average here. So that's the white line down here, and the BBWP is taken off. And this is the lowest level that we've seen on this chart. So, this is suggesting that if we are going to see this continue to close above the upper second, it's going to expand quite aggressively. Which, to be fair, volatility expands in both directions when you see a compression like this. So you see the lower second standard deviation is also expanding. And the criteria would be, as long as it's trading and closing above the basis band, you'll see the lower standard deviations then curl up, just like we saw the upper standard deviations curl down once we saw closures below the basis here. We didn't quite get a squeeze to expansion to the downside, but we did see a consolidation to expansion. This is a squeeze to expansion. So that's another point in the bull's court. Yes, price can run the bands, but on the weekly time frames, you rarely see it. What I will say is this is the upper second standard deviation on the 3 week. So, and then this has got 2 weeks to close. So it's going to be closing in the second week of November. Well, it's not really, it's going to be like first week. It's going to be closing in the second week. It's closing the second week of November. My apologies. Let's see here. 33,000 is the pivot there. It is not yet getting expansion up over the moving average, but if we do see a closure above the upper first and even the upper second, this is going to start looking like, quite honestly, it's going to start looking like not only is 36.2 going to be available, but we might even be looking past the 40K area to 46 to 48. It's getting there. 4 weeks going to be closing this weekend as well. Upper second standard deviation is at $34,000. Bulls want to see a closure above there on the 4 week. But closures above the upper first are just fine as well. We do see that we're already getting expansion on the 4 weeks. So the 3 weeks kind of an outlier here. And this one also lowest levels that it's ever come from. And this gave us the bias that this was going to be getting expansion back in June. And it held that basis band to the downside, which is coming in at that 24 7 to 800 area. So very, very good. Very nice. And then, of course, the big one is the monthly. We see that expansion is already in play. We're looking for confirmation. This is the beginnings of an expansive signal. Look, when expansion starts kicking off to the upside, we've seen this over and over in Bitcoin. That does not mean that it's not going to head back down and find support at some of the lower levels. But it usually signals that once expansion starts getting rolling with Bitcoin, not above the upper first typically, but above the upper second. If we see an upper second standard deviation close within the next month or two, coming into the end of the year, this is going to signal that this is going to go on a legitimate all-time high run. Meaning it's probably not just going to go here to this previous high. Like, you still got to take support and resistance levels into account, but it's likely going to run for the all-time high. And there's not a single time that it has not done that in Bitcoin's history. And I can tell you from experience in using bands in traditional markets, anytime you see a monthly over the upper second and or below the lower second, it's usually running for the most recent highs and higher, or the most recent lows and lower. And very rarely in traditional markets does it even go lower than the most recent lows. You might get wicks on the macro timeframes, but typically not further than that. Expansion on the more macro timeframes to the upside, like this, above the upper seconds, have, in Bitcoin's case, always led to new all-time highs. So, and that is off of the first closure. So that, there's pullbacks in the shorter term timeframes, as you can tell by the wicks over here, right? But after that, it's pretty much over. Now, that doesn't mean that Bitcoin doesn't go up to the upper second standard deviation and get a pretty violent rejection. So just keep that in mind as well. Let's go to this is not what I want to look at. We're going to look at the index here for just a moment. So I want to call your attention to this close right here in 2016, and then boom, up. Yes, did it come back down to the upper first? Absolutely. But then it was up only really from there. I mean, so you still see it come back, but that has led to, that's kicked off. I'm sorry, it's back here. It was May of 2016. Maybe I already said that. And then it was up on its expansion to the upside, straight on through. When you go back a little bit further in history, you can see that rejecting that area, get the first closure above it, and then boom, yes, it comes back down for support. But this was already an all-time high run, and then boom, up again. So, these are the very early days of Bitcoin. And then when we come back to 2018, 2019 to 2020, you see a rejection at the upper second. So it did swing it, came back down, ran that lower first, rejected that upper first, got above it, pinned a three candle high structure trying to be built, didn't pass the wick low. Then first candle close in October and up. So that is what the next thing to look for is. So being above the upper first, likely going to see the upper second get tested. Doesn't mean that it doesn't just turn into a wick, but from there we look to see where the monthly close comes in November, December, January, February, so on and so forth. All right, that's there's a lot of time on Bitcoin. It's pretty easy, past 35,170 or 157. Then we're looking 36.2 to 36.6. Above there, 37, 37.5 in the shorter term timeframes. But ultimately, we're looking at it playing up to somewhere around 37.7 above there. The monthly at 38.5 to I would say 40. Back below the range lows here, the wick low at 32.850. Keep an eye out for 32.4 to 31.8 below there. Then we're looking 30,600 to 300. Below there, 28K is really where you want to see hold. All right. So let's go ahead and look at Dixie and see what Dixie's up to. When we look at Dixie, we can see that it is putting in a bit of a consolidation structure here. It did put in it's threatening to put in another high here. So let's go ahead and take a look at RSI and see where it's at. It might be getting more bearish divergence. It is. Excellent. So, this will maybe give a little bit of relief to traditional markets. We'll see. Traditional markets breaking structure to the downside, but they're kind of in between one of the major areas, the breakout areas, and the only thing that would concern me is if they begin to break down the next low that we'll look at in a moment. But Dixie below 105.58 will turn momentum back to the downside. Currently trading at 106.13, so I do think that they're going to converge that pivot with price here coming into tomorrow's open. So today's close, tomorrow's open. Got a drive of bearish divergence there. Another one for the 2-day as well, and the 2-day is closing with today's candle, and 106.65 is the pivot there for momentum. Keep that one in mind. And I do suspect that if we see both of these confirm, this is likely going to take a leg down towards somewhere around the midline, 105.30, which is where the midline is coming in. That is, generally in this area here. The lower first is coming in at 105.25. We have a previous support resistance level at 105, so somewhere around there. And then, of course, we've talked about the 104.69. That is where the lower second's coming in. I suspect this is going to move up in between that 104.69 and 105 level. The 3-day, which is closing today as well, is probably not ready to paint anything yet. Yeah, no, nothing yet. Is there longer term divergences? Yes. No. Yeah, I guess you could make an argument, but they're so long term that it doesn't matter. Basis bands coming in at 105. Pretty bouncy area. It already kind of wicked down towards there. So if we did see a close below there, it's likely to play around the basis and then lower. The 4-day is going to be closing with today's candle. This is also not painting anything yet. Momentum pivots 104 for the 4-day. 107.31 for the 4-day. 106.62, which it's currently trading below on the 3-day. So 4-day is going to be 107.31. The 5-day just opened, and this is ready to throw when you see RSI passing through a signal line, in this case, it's not really a signal line. It's just a simple moving average. It's a 12-period SMA on RSI. And when you see this crossover, it does give you the bias that things are, generally going to keep heading down. But it's not like a death sentence. It's 106.04 is the cross down. It's going to cross down. It's already projecting the cross down, but the next biggest area to pay attention to is going to be, this is going to change at close on the next closure, and that's showing 104.40. I would say 104, the upper 104 region is a little bit more, well, maybe not. If it does lose the upper first at 106.05 and break through supports, we've got the basis all the way down there at 104. So that's going to take a lot longer, I suspect, if it's going to happen. In terms of, we're tracking each day. So I think it would take a little while to get there. Weekly is right there at the same level. Seeing the same things being painted. 106.93 on the weekly. 5-day is going to be the same. What about shorter term time frames? Like the 4 hour is looking for expansion into support. I'm not like, yeah, I mean, it is contraction to expansion on the 4 hour closing and bouncing off that lower second standard deviation on a close open as well. It is giving me the bias that, 106 probably going to be tested and probably a little under, but it's not doing much outside of consolidation right now. Got to see it on the daily really start to break down below that lower first, and really get below 106, and then we come back to it on Wednesday. When looking at gold, gold I think is still playing around the $2,000 level. That's at 1997. All right, so it did play up on Friday to a high of 2010. So that's one of our areas, 2010, 15, and 20 to the upside. Still holding that upper first standard deviation. That is at 1981. If it does lose that area, I would keep an eye on the wick low. That's coming in at 1953. Below there, then we start eyeing the highs around 1942, 1930, and then 1920 at the basis band here. For right now, it's, this is a nice upside move. Got a nice curve of the Bollinger Band. See the lower standard deviation starting to curl up. The upper first is there at $2,045. So, above 220. I do think it makes a run for 230, 240. So that is a pretty realistic target up there at 245 as well if it is going to continue up. And that is lining up with the lower high right here. So right around the top there. We start seeing the top break. Longer term time frames probably going to start really ripping. The daily is getting there again, just like Bitcoin, just like when Dixie was moving up in a very aggressive manner. We don't see any in-trend bearish divergence. So until we see that, we're not even looking for too much outside of, lower term time frame pullbacks. And even on the bigger booms down, it's probably going to, slingshot right back up. And then, then we start seeing that bearish divergence, right? Whether it's hidden or in trend. And realistically, you want to see in trend bearish divergence. We don't see that right now. So, oscillator stuck to the top. We got to be paying attention to divergences and volatility in this case, and that being band volatility. So you can see that it's cooling down while maintaining above the upper first. That does mean that, it can do just like what we observed Dixie doing for a couple of weeks, which was just cool down while it's in that bullish position, come down and dip into the basis band, and then come back up and or just use the upper first. And even at one point, it was so aggressive to the upside that it dipped all the way to the lower first and then boom, up. So that's something to watch for with Dixie. I'm sorry, gold. The 2-day, which is closing with today's candle, is pivoted at 1934. The upper seconds at 2012. It's going to continue getting expansion above the upper first standard deviation. Again, this is the look right now is showing, significant overhead resistance and downside risk when looking at volatility. So above the upper first at that 1961, great. Above the basis, great. That's all the way down at 1911. It's probably going to be around where the daily is at 1920. Great. I mean, in general, what would I say? Pivot for bullishness and bearishness is probably around 1900. So that's going to be my take on that. The 3-day closing with today's candle, upper second standard deviation at 1997. If it does close above there, aggressive expansion continues. We see 1860 is the 3-day pivot, still well above there. 1821 on the 4-day, which is closing today. Upper second is at 2010. So if it does close above there, very aggressive expansion on the 4-day as well. Looking for more. As long as it's above the upper first, it's going to continue getting volatility expansion. That is 1967. Likely to update to around 1975, 1980. The basis band is 1923, so we have confluence with the daily currently. The 5-day just opened, and it did close open above that upper second. So we do see quite an aggressive uptick in BBWP volatility. We're still seeing that bullish divergence play out. That was a hidden bull div. Yeah, volatility is telling us that, don't fade the move. This is, even on pullbacks, I wouldn't be fading it back to this last low and lower. I'd be fading it down to like 1950, 1920 area. And I'd be very, very careful. 1837, probably more of an opportunity than not. And the weekly should be 1837, and it is. The weekly close came in at 2006, and the next close above it is that weekly at 2015. So we are going to start marking these now because we're getting to some critical areas. For the open was actually a little bit higher there, to be fair, at 2016.65, and then we've got the weekly wick high up there at 2081. Now, for structure on the weekly, you want to see that low at 1953 hold on any kind of a pullback and close. If it does put in a high, this still would be a downtrend break. So, keep an eye on 1900 to the downside. And, there is another weekly up there. There is another. We reclaimed this high. So this is going to be the 2036. I knew there was one in there somewhere. I'm sorry, 2034. So that's what to pay attention to overhead. I would argue that you're going to see 1890 to the downside. I would argue that, man, at 1920 is where I'd want to see it hold. That's such an important pivot. Some might argue maybe even 1930. Let me just search over here. You know what we'll do? Here's what we'll do. We're going to pull an aggregate. Now we can't pull. We got to go to. We got to go to a different gold chart. So let's go. Instead of CFD, gold. We're doing this one already. We'll go to capital.com. Let's go ahead and turn on volume. Okay. So nice low volume move up. Oh, but it's supposed to be high volume. It hasn't broken out yet. Don't worry. In this case, it's a big consolidation on the weekly. So, all right, let's get rid of bands and let's go ahead and pull. This is our deviation. So I'd pull from here over. So we could take this low over. And we'll do anchored. Do the pullback to that low. Okay. So on the weekly, it's showing, man, 1786 on the volume profile. And it's well above the value area high, which means that it should be building. This held strong right at that volume area and this prior low at 1800, 1810 region. This is looking very strong from a volume point of view as well. Now, the argument is like, look, it's low volume move up. Well, when you hit high volume, it's either going to be a rejection or it's going to be at the highs and it's taking them out. It's taking people out of position and it's going to march higher. And then people will reposition higher. And in this case, this looks pretty good. Now, it could also be the indicator. So we are going to check this using fixed range volume. Just drag that over. Okay, so fixed range volume is showing a little bit of a different look. So let's get rid of this one. All right, point of control on the weekly was actually the area that was spiked. It's coming in around 1810. Above the value area high, that's where you're getting your 1962 read. That's above this close open right here. For right now, for the integrity of this move, that's kind of where you want to see it hold. Because below there, then this low gets violated, most likely somewhere around the 1950 region, and then that's in danger of putting in a high. Yes, it is a downtrend break, though, and we would be hunting high or low structure, at least in my opinion. So, all right. Glad we looked at that. So I hope that gives you a little bit more perspective on it. Above 1950 to 60, looking good to keep continuing up. If it can break out of the local area, watch 2010 to 2015, 2016 area at that weekly. And then overhead, it's probably pretty quickly to the 2020 to 30 area. Now, engaging traditional markets, we can take a look here and we can see that the weekly ugly as all hell on Dow, closed below the lower second standard deviation. It's in very, 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 very bouncy territory. So, but it's bearish below the basis band, and that's all the way up there at 34,168. So, when looking at this, that is also right here around the wick high of this lower high on the weekly. So this thing is bearish below 34,150 right now, we'll call it. So and that's right around the basis band of the weekly. Did get expansion, but it's in very bouncy territory. So as long as it's closing above the lower second standard deviation now at 32,550, 540, 550 area on the daily, it's looking good to keep testing up further, possibly even to that lower first at 33.3 to 33.4. And then above there, we start looking to, the closes on the weekly, 33.5 to 6, and then 33, 6 to 8. And then a possible test of the highs there at 34 to 34.2. This is the other reason why it's looking pretty bouncy. It's not ready, I don't think, by any measure. But 32,700 is going to be the momentum pivot. Now, it's still bearish on the bands, though, even if it gets a cross back to the upside until it regains the basis at minimum. Then it can play in the strong half of the bands and or consolidate, and then we evaluate whether it's going to move down further. And I would argue that it's still bearish below 35 in terms of its structure. So that's the upper first. That's this last little lower high here. You could make an argument that there was a head and shoulders somewhere in there that got hit on the daily, and maybe it's going to lead into the weekly, and everything's done. It's all done. It's toast. Warm, buttery toast. All right, so expansion to the downside on the daily here into bouncy territory. So it's 32,550. It's trading almost 33. If it regains the lower first standard deviation, we're looking at this being, it's playing back to somewhere around that high, around 32.2. 33.2, rather, I'm sorry. 33.2. And this, still would be expanding to the downside, so the lows can still be in play for quite a while. We're seeing our first drive of bullish divergence here on the daily. Is there going to be a possibility for divergence on the weekly? So this low is all the way down there at 31.8 to 31.45. Yeah. Yes. There could be a big old continuation drive here. Especially if we start seeing 33.1 reclaimed to that lower first at 33, 350 to 33.4. So I would not be in favor of continuation unless we see 32.5 broken down below again. Then I'd be looking for, possibility, 31.8 to 32. Go figure, it's 31.8. 31.8 was the big pivot level for Bitcoin to the upside that it broke through. If this breaks the downside 31.8, it's probably going to retest the lows down here. So, yeah, this is looking okay for a bounce. Now, look, you can play with your trend lines all you want. Volatility and horizontal support and resistance are what matter. I am not going to entertain trendline charts. They only are going to be confluent. If you show me a trendline chart that is confluent with a horizontal level, then you've got your confluence. If you can show me confluence, you've got a case for whatever you're trying to show me. If you just show me trend lines, you can fit trend lines any which way you want. And I've saw this a lot from the bears. You probably saw this a lot from the bears as well on crypto Twitter. They're fitting all the trend lines and they're seeing what they wanted to see. So I'm going to tell you right now, this is very likely. It's still bearish below 35, but it's very likely to get a bounce this week, headed into the end of the month. Now, more importantly, what you want to pay attention to is the fact that this monthly looks like garbage. And if it does close below 33,160 by the monthly close, then it's looking further down. I mean, this high that was put in, that's a solid high. It came on bearish divergence. The monthly's ready to turn down on Stoke, so 33,431. Then we're looking, we're looking down below there, but don't fade it when you see and if we see 32,530 hold, and that's the pivot that was just hit 32,330. If we see that close below, then the quarterly is toast for a little while. All right, so that's where then we start entertaining a rundown to 30,600 or so at the quarterly basis. If we see that, there's big support resistance areas to get through on the weekly at 31.8 to 31.4, but that's probably the destination around 30,005 to 600 at the quarterly basis. Below there, then we're looking back to run those lows again. So looking a little bouncy right now, though. Keep an eye on it. That bounce could lead into the 2-day. And the 2-day did not close below. We saw the closes below the lower second. This was a bounce off the lower second. So this is setting itself up for reversal on the 2-day chart. 33,221 is going to be the number to watch. That's going to probably change and be more local in terms of price action. 30, it's probably going to be right where price is trading, to be quite honest, around 33. So very important to watch what's going on over here if you are, if you have retirement accounts and or if you're trading stocks, and especially options. Because the volatility is affecting the spread and there is some opportunity there. So if you do understand options, there's some pure volatility plays just with the Greeks right now. NASDAQ, we're looking at 14,260 turn up the oscillator there, 2 turn up the oscillator. We got lower lows on RSI, lower lows on price action. So not too much going in terms of that. Below 14,450, still pretty bearish. If it can regain that, that's that wick low over here as well, then I would be looking up to around 14,550 to 14,600, and then eventually 14,700 to 800 by the basis band there. If we do see continuation, it's going to come on closes below the lower second at 14,100. Then I'd be looking to the support down here at 14,050, and then down lower to that, probably where the lower third is, 13.8, 13.9 area, and then eventually make its way to 13.5 to 6. Right now, the 2-day is still headed down below 15. It's actually 14,925. Sorry, not it's doing the same thing. Closed below the lower second, now getting a bounce out of it. Weekly, ugly, closed below the lower second on the weekly, getting expansion, kicking off expansion to the downside, but it's expanding into support areas right in here. It already tested that area at 14,000. So if it does reclaim the lower second at 14,225, I would still, favor runs of the current low and maybe wicks lower. But until we saw closures below it, not really interested in looking too much further down in the current wick there. Closes back above the lower first at 14,600 would give me the bias. It's going to go run the weekly basis. Still bearish below there, and the upper first at 15,400. So still looking down. Weekly's looking to bounce on any closes above, at least momentum's looking to bounce initially on any closes above 14.3. And monthly is the one that's going to be worth watching coming into close here. 14,461 is the pivot there. And then quarterly's already kind of turned up, 13,240. So it's kind of giving me the bias that this is in for a little consolidation, maybe some testing a little bit lower, but looking good for a bounce at least now. We'll see what this matures into over the course of this week. And then SPY hit our target to the downside at the 410 area, even dipped a little bit below 408. Getting a nice bounce off that lower second right now. It's not even close to setting a low until it can get above 416.50 to 417.50, and that lower first there, 418 to 420. Now, if it can get above 418 to 420, I'd be looking for it to make a run to like 422, 423, and then eventually 425 to 426 around the basis band here. 412, it would turn this back up, and the weekly, same thing, close below the lower second, pop back above. As long as it's closing above 413, 412 region, it's looking good to test higher, at least to that 420 to 425. Yep. Where the lower first is. Above there, still bearish below 438, 440 around the basis here. Above there, then we're looking at 450, and I would still call it bearish even around that area until we see it crack above. It's more bullish than bearish, but that could be a very rejective area if it does continue up there. Weekly is about ready to bounce from the deepest level it's been at in a very long time, though. 413. Now, this could go both ways. This could get a bearish bounce as well, but we'll have to watch it. Below 440, basically, on the weekly, and that's more long-term. Monthly is looking at, monthly, playing out that bearish divergence back to the basis at 411, 410 area. If it does break down, we're looking at, 380, 390 around the lower first, and then below there, it's running the lows again around 360, 370, and possibly even, retested the wick low there at 347 or so. It's still a ways away. Macro structure is not pleasing to look at right now, I can tell you that, in terms of the monthly or the quarterly. But I'm not favoring like a massive bull run from here. I'd be favoring more consolidation for a very long period of time, to be quite honest, if this does play out the quarterly. But it's got to close a quarterly below 407 for that to even come into play. So that is something to watch. The open's actually, the open's actually what was spiked, 408.85. It was the quarterly open from April of 23 this year. So below there, that does open up the lows again, from the quarterly perspective, but 408.50 is also the quarterly pivot, and that would turn it back to the upside here. So, it's in dicey territory, but it's not as doom shoddy as it initially looks. I do not like the lower high structure being built on the monthly and looking like it could confirm on the quarterly, but it's not there yet. So the monthly is where it's got to hold the basis. It's coming off the lower second and third. Swing that upper first, come down to the basis to lower first, 380 to 390, and then come back up. And that's where, if it does take out this high from July at 460, it's off to the races. It's all-time high and more. So that's the flip side. It's crap structure until it's not. Like, it's got bearish structure being built, but it could easily put in a low here. And lows are going to come back on above 440, and then SPY's running its local highs. And if it takes it out, it's running the higher highs. So just understand that. I don't like the structure. I don't like the look. It looks more like a consolidation, but it's also in the bullish half of the bands again. And it was not all the way from 22, April of 22 until May of 23. It was not in the strong half, and now it is. So you can't fade that until it breaks and shows you that it's going to break. And it's not there yet. So looking for a bounce on the daily. Could that lead into more? I mean, it's already bouncing now. NASDAQ's the same thing. Dow is the same thing. And you're going to hear like, oh my God, lower high. It's lower high. It's taking out the low, and it's going to take out COVID lows, and it's going to take out this low over here, and it's going to take out this low from 2008. Like, no, come on. Even if all the banks failed, the Fed is still, we still have plenty of money in circulation. It's going to move. Trust me. And the markup is real from the printing. So they can squeeze everybody out as much as they want, but it's really just consolidating the money into, fewer and fewer at the top. And wherever they put their money is where it's going to, where everything's going to follow. And right now it's all defense stuff. So not going to look at that today, but I will turn back on the tunes here, and we will look at chats, and we'll see what you guys have to say. Jimmy says, yeah, it's kind of hard to be bearish on the monthly until we see the structure actually break. 6 months year of consolidation, 6 months of sideways, post consolidation breakout. Analytics tell me, yeah, this is the risk management side of you. Analytics tell you it's much more biased to the upside than downside. Guys taking shorts right now are taking shorts as a hedge risk against call options. Anybody telling you that they're fully short this market would have already taken profit by now. Yeah. So that's a long one, Jimmy. Yes, I agree with you. And, you also have insight into what's going on. And a lot of that's really complex stuff for options positions. And look, either way, what a lot of people don't seem to understand is they think that it's that funds and market making firms are all very binary. They're either it's going up or it's going down, and they don't understand that you make money when it's going up and when it's going down and when it's consolidating and when it breaks out and when it pulls back. If you're doing it right. If you're just a hedge fund, well, you're there to hedge, and in many cases they get overloaded on one side or the other. But if you're an actual trading firm, like you're hedged in all directions at all times. So it's more about the risk profile of the portfolio that's being managed, and then the quant data that you're getting for risk assessment on the market right now is bearish neutral because of the most recent, lower high on the monthly, right? So, but because it is still hanging around the strong half of many bands, and many standard deviations, this looks like a macro consolidation. And considering we've already had bank failures and banks are being floated on one side, that's not the concern. It's all commercial right now. Yeah, and exactly. So, when you're shorting the shit out of commercial right now and you're making bank. Exactly. And so then you got to place that. So where does it go? Is everybody going treasuries? No. I mean, a lot are going crypto in preparation, right? But that's still a fraction of portfolios. And yeah, so where do you go? You're sweeping the floor on the the Fantastic Seven. What is it? The Big Seven or whatever? Pretty soon to be the Fantastic Four. Oh, okay, that's why you said fantastic. Okay. So yeah, look, there's a lot of people really dooming about the recession. They've been dooming for so long about the recession. It's coming. The recession is coming. They're like, the Paul Revere of recessions, but they don't get the timing right. Like he was like he was either too late or too early. Part of yeah, the silent recession is real. Yes, the silent recession is real, which is why we're seeing the allocations. They learned from what they did in '08, '09, and they backstopped before they had to publicly bail out. Look, it's the run on the banks and it's the run on the markets that they were trying to prevent. And you can only run the banks if you run and take everything out of the market, then you run the bank. So they were seeing the boom. That's why the markets started to move up. Yeah, then you can't move it. Like, oh no, I'm making money. Like, why would I take it out right now? Right? So, all right, cool sidebar. I got to look at the other chats though, buddy. I'll talk with you some more maybe at the end. Just for those of you guys that don't know, Jimmy works in a trading firm, otherwise known as a prop shop. You can call it whatever you want, but he's a trading firm and he's a education coordinator, former risk management quant guy. Know him very well. He's a good dude. Yeah, you don't deal with any of it anymore. It's just training. Yeah. But your insight is valuable, dude. And I appreciate you giving me that. Let me go ahead and actually turn on the music, the Musax right now so that I can look at some of these other chats. Did those guys have any questions? The guys that are going studying for exams? No, they're just observing. We're just... I'm sorry, buddy. You don't have a username over there yet. But he says, just observing how someone with experience breaks down everything that you're seeing. It's still fairly new. Yeah, it gets easier with time, but don't worry about it. There's so much in the analysis that I'm doing that's probably not said, more implied, because you really do. As you're going through your exams, you're learning all these different things. You're learning about price action. You're learning about you're learning about the intricacies of how, when looking at price action, how ordering and auctions actually work, because at its core, it's all an auction, right? So you've got your bids and your asks, and the price action is just a reflection of those auctions, right? So it's going to create structure, and trending structure is the most important structure. So it's trend, and then you have support and resistance areas. Where did more bidders come in and lift the offer, if you'd like, to use the actual terminology, and where did resistance come in, or where was the bid getting hit? That is your support and resistance levels. And then you have volatility. How quickly is it moving from one level to another? How quickly, does it return to the mean? That's your volatility. And all of that creates the fourth key pillar, and that's momentum. And momentum is directionality. And that's why you've heard me say many, many times, always look at the trend. The trend is your friend until the end of the trend. That's a famous one that everyone has heard throughout trading for a very long time. The trend is your friend until the end of the trend. And I've modified that and been saying it for a very long time. The trend is your friend until the end of the trend. And when the trend is unclear, everyone is in fear. Because, you look at the 15-minute time frame on Bitcoin. Let's just go take a look at it real quick. This is really interesting to understand, because you can see it's an uptrend on the monthly right now, right? But you've got people calling for $8,000 and $10,000 in Bitcoin right now because of the 15-minute chart. Because it looks like this. This is an unclear trend. There's trends within trends, right? So if you look at this trend, and you're looking at this trend right now, and you're going, "Oh, this is bearish." The hell is telling you it's bearish? It's just a consolidation. It's neither bullish nor bearish until it breaks one side or the other. Like, it's a range. But what you got to understand is double top right here. See, there's two double top. It's going down, and I got my target of $28,000. Like, what the hell are these people looking at? Until it breaks higher time frame trend, right? So there is an order to trend. This is an uptrend. Hey, look at that. We even got a higher low. Could it do a lower high immediately right here? Sure. Still a consolidation until it breaks that wick low, though. Right? So that wick low is coming in at 33,400. It's a consolidation until it breaks that, at least on the daily. And even then, it's got to close open and contend with at like 33, 33,100, and then a wick low there at 32,800. It's all about understanding that structure. Can you get bearish below this wick low? Yeah. And you can target some of the major levels that we talked about, 32.4, 31.8. Below there, 30,800, there's a daily, 30,600, there's a daily, 30,300, there's a daily. So there's weeklies also fall right on the 30,300, 600. And then below there, you got your 29.45, your 29K, so you just go down in order of where these support resistance levels are. But it's the trend that's going to get you there. And like, oh, well, I mean, trends being built from the 15-minute on. Like, oh, okay. Yeah, you're right. And as soon as it does a higher low and takes out the higher high on like the hourly, for instance, it's looking fine. So we have an uptrend here, still intact. Is there a bit of a closing lower high? Could it take out this low? It tried to swing it. But it's like, if you're going to be subject to that kind of stuff, you're really just doing intraday trading, right? You're not doing a swing trade based off of this hourly chart. And if you are not, your idea needs to be flipped. You should be basing your swing on the daily and using the hourly for positioning. And, getting close to that daily swing area that you want to get in at, right? And vice versa. So a lot of these concepts are going to come to you. You'll have like an epiphany with each and every thing that you start to look at and dissect. But just remember the order of importance. It's trend first, because trend, it's like mathematically impossible to project something if trend does not support it, right? So you have to look at trend, and then you look at these, and then you look at support and resistance, and then you look at the volatility. The what does Crown call it, guys? The dispersion of returns, right? No, that's not. I guess it is. Volatility is, yes, because it's distributed returns on investment and stuff like that. So, but volatility is the speed in which price has moved. In this case, you've got close over close movement. Will give you, it's a reflection of volatility as seen as momentum and trend. And support and resistance also plays a role, and that's why momentum comes at the end, because it's trend, support, and resistance, volatility that create your momentum in a specific direction. And I'll give you a tip. When you see a low being put in, then you look at, or a high being put in, then you look at your momentum. It's much easier, because if you're just eyeing momentum the entire time while a move is still ongoing, you're probably going to get trapped in the lower term time frames. Right. So like the high got put in here, then you look at momentum. Momentum's probably going to turn, right? Low got put in right here on this candle. Momentum wasn't even ready to turn yet, but the low told you that, it was going to probably head up and turn, right? And then if you're using a free indicator on like TradingView, and you guys have your own set of indicators, so this is just for everybody else. On TradingView, there's, the BA reverse Stoke panel. You can search it for free. It's got pivots, and it's got the overbought and oversold zones, already mathematically calculated in there. That's very handy. But like this low came in before the momentum oscillator turned. So if you're just waiting for momentum to turn, then you're not paying attention to the chart. You're going to get probably, it's still pressure down. Well, then you're probably going to get taken out of position. All right. Cool beans. All right. Music is on now. Let me look over here. Hi, Bobby. Hi, Jedi. How are you guys? I see a lot more in here, but they're not chatting. And ever since I turned on the only subscribers can chat, just so everyone knows, that's not like paid subscribe. I don't do paid anything. It's just a channel subscription if you want to chat. So if you do want to jump in and chat with these guys, we've got Bobby and Jedi in here. We usually have quite a few others, but today is a bit of a different time. All right, so consolidation, fake out, tease, run, bearish sentiment on S&P 500. It looks good. Yeah, I think I pretty well covered my thoughts on S&P and everything. Like it's in the strong half of the bands, and until it loses it, it's really just go test the current lows and then come back to it. But it's got an opportunity to really fake everybody out to the downside and then rip faces to the upside above 460. Above 460, it's going for the all-time high and probably much more. And that'll probably coincide with some sort of news. Gosh, it's Monday already. Yes, Jedi, it is. If you take a look at the macro, following two tickers: ETH BTC, FET Tether. Okay, I can look at those in just a moment. Yeah, you do have to have FINRA certs, Bobby. So at least your basics, if you ever want to work in one of these places. Not all places, like some places you can get in without having your initial certs, like SIE. Some guys also go to Jimmy just to get certifications. If you're really serious about it, you know, it is something that I can help you with. You're welcome for the alpha. All right, let's go ahead and take a look at ETH BTC on Binance. I think I've already got ETH BTC for Binance, right? No, I've got Bitstamp. Is Binance chart longer than Bitstamp's? It shouldn't be. But yeah, let's go look. ETH BTC. Let's look at Nance. I guess it is. They recompiled the data. What do you want to know about ETH BTC on the long term? It looks like shit on on the weekly right now. But zooming out, it's just a giant consolidation above a 50% level. So here's one of the things that this is something I'm going to caution a lot of the ETH bears about. Look, you guys know that I'm not a maxi. All right, I'm a maxi. I'm a Bitcoin maxi. But from low to high right here, from where it was, I mean, it relative to Bitcoin, it flew and kept flying, right? So 618 is, 0.046 satoshis, whatever billions of satoshis that is. I forget, to be quite honest. It had that little double top area around 0.08, almost 0.09. It's in some real bouncy territory on the weekly. Like it's pretty damn low. And I suspect Bitcoin dominance is probably putting in a short-term high, if I had to guess. It broke out, to be fair. It's still going. Yeah, so it broke out above our 53. I do think its destination is going to end up somewhere around 58 to 60. It could still play down to like 52 again, but yeah, this is this is getting close to a high. Not on divergence, at least in trend just yet, though, so beware of that. And 50.88% on the weekly is looking pretty damn good. And the monthly is at 53.25. So if it can stay above there in the monthly, it's still headed up. Quarterly is 41.97. So yeah, not too much history on the quarterly. Daily's looking for a little bit of a pullback. That is likely going to do nothing but help ETH BTC. It's really, it comes down to, this is on the monthly. it's getting into some dicey territory. Now, having this head and shoulders that it hit target on from the lows in 19, you know, it hit target and then lower. It never got higher than the 0.11, 0.12 area of Bitcoin in terms of its value. So, I mean, it could consolidate for quite a while. And we're seeing, you know, the narrative shift towards Bitcoin because of ETFs. And you're going to see ETFs as well, spot ETFs come out probably pretty quickly after. And then you'll probably see them run together for a while again, whether it's to the upside or downside, and, you know, have that ebb and flow. You know, your alt season, Bitcoin season, alt season stuff. But when Bitcoin cools down, you know, which it's doing, we should be seeing bounces in everything else. And, you know, monthly's down below 0.065, so it's pressure down for a while, but it's in bouncy territory. It could still head down, you know, from the weekly perspective to the lows there at 0.049, 0.05. You know, it's expansion on the weekly. So you know, bounces here and there. It's still bearish below, you know, 0.06 rather. Like heavily bearish below this last consolidation. And quite frankly, it's bearish below this close open over here at 0.053 or 0.054, you know, above 0.055. Then we're looking, you know, for it to try and set a weekly low, especially if it can close above 0.05548, so 0.0555. And then we can start looking up a little bit further. And then if it can regain 0.06, then it's looking a little bit more healthy to try up further for that consolidation around that 786 up there. 0.056 is going to be the bouncy area on the weekly. It is not there yet. So we'll revisit this. Remind me to revisit this on Friday. Looks like it looks like it wants to keep testing down further, to be quite honest. And that doesn't mean that ETH isn't going to continue to test up in terms of, you know, in terms of its structure here on the daily and weekly for US dollar. Looks pretty damn good, to be quite honest. You know, is it finding a little bit of a high? No in-trend divergences just yet. Looks fine. This could still test, you know, this could test, you know, 1870, 1900. Could test $100 up. If it does lose 1768, just keep an eye on the wick low here at 1745. This guy right here, to just like Bitcoin, this little spike low at 1725. Then below there, we start looking at like 1700 to 1650 again. But still good, even all the way down to the lower first, as long as it stays above this low, somewhere around 1570, 1580. Is that what bulls want to see? Hell no, but it's still fine structurally. Below there, it's bye-bye. It's going down to test 1515 and below. So it looks pretty good on the daily, and the weekly's turning on US dollar as well. 1630s the pivot. So it's still looking fine to test up further. You know, this could easily run back to 2K, especially if it can breach above the upper first on the weekly at 1873, 1900 area. It's probably a pretty quick trip to test 2K. And, you know, until we saw closures above, I'm not really interested in much more. You know, we saw it fake out up here, but that was a structure change, you know, and it's from the weekly perspective. You know, it's lower lows, but it's still got the major low that it's got to hold. It held, you know, 1515 to 1462, and you could even take that wick low if you like, but this is Nance. Oh no, this is Coinbase. So we're looking at 1370. I mean, it's brutal. It's a brutal drawdown, but if you're in a short position, it's beautiful. I just wouldn't be overly excited for it to test much further down than that. Let me look and see what else you got. So we've got FET USDT. FET, huh? I did trade some altcoins over the weekend, so I'm not gonna lie and be like, nah, altcoins are terrible. No, I've been trading. I was trading all weekend. I was also just kind of trading from my phone, but there was some coins that were just moving, man. This was one of them, huh? Okay, this is legit expansion, legit breakout on the daily. It even reclaimed these lows and this consolidation over here. Dude, this looks actually pretty good for a little while here. You don't really want to see it breaking down below around 31 cents to, there's kind of a range in here. We'll split the difference. We'll call it 27 to 28 cents. All right, so breaks back into this area. It's still fine, but you'll notice that one area marked at 31.1 is the upper first standard deviation as well. So it can come back pretty violently. You don't want to see it past like 27 cents if you're bullish on it. Looks, the breakout looks real for now, but it is, it's an altcoin. They can do whatever the hell they want and retrace entire moves in the single candle. 36 cents is going to be the pivot. It's looking pretty good above there. 36.38. 36.28 is the pivot for momentum. I wouldn't put too much weight on the daily just yet, as I bet you those lower term time frames are just resetting and getting really bullish and keep pushing up. 2 days 29.65. Upper second standard deviation might be a warning that it's going to come down and retest 31 to 30, maybe even that 27.28 cent region. 36.28 is actually the daily momentum pivot. That's where the upper second standard deviation on the 2 day is. 3 days up above 22.4. It's above the upper second. Upper second is at 31.6. 4 days looking pretty good. That's this little breakout, this little local breakout is legit. From the it got higher term time frame closures above here, including multiple lower term time frame closures. 5 day looks very good for upside. This is probably going to test somewhere around 40 cents. I mean, it already did, huh? No, not yet. Probably going to test somewhere around 40 cents to the highs. I mean, quite honestly, there is a spike high there at 44.8 if you want to mark it, but we'll just go with the closes here. I mean, the close up there at 48 cents, 50 cents, maybe even the wick high up there, which also has some confluence around, the mid to low 50 cent region. Looks like it wants to run there. I mean, everything is fine above 20 cents right now, so it's got room. Weekly's 30 cents for the pivot, so below there would also be below, right around that upper first on the weekly, and you're probably looking at this thing. This would, I don't know. It's a breakout, dude. I can't argue with a breakout on the 5 day weekly time frame. Can't. I just can't. It's 28 cents is, I would say, yeah, upper first on the weekly, 28 cents. So that's there to watch to the downside. Other than that, probably pullbacks in between. I would still watch around 30 cents. As then you got to keep eyes on that 28 cent region. But it's probably targeting somewhere around 40 to 45 cents, maybe even 50. If it can continue. I mean, we're looking at a weekly chart, so just keep that in mind. 28 cents is also 28.5 is also the monthly, and it's looking at bullish divergence playing out, and we're coming into the, if it closes like this, it's looking pretty good, looking like it wants to test up further. And to be fair, this is a macro higher low chart. Yes, there was a downtrend, and now we're looking at a possibility of back above 60 cents. It's a trend break, higher low trend break, and now you've got an uptrend on the monthly. Probably leads to bigger things over time, or it just tops out, goes sideways forever. It's actually not like the worst chart I've seen for alts, so I don't know what this is, what it does, but it's actually not too bad. And usually you're throwing me like absolute garbage. I don't know where you find some of the garbage. And then there's other charts that just keep on fucking rolling, man. Excuse my language. But there's some that you've shown me that I'm like, I don't understand if this is a money laundering op or not, because that thing is just going up and up and up. And if you're going to launder, you're going to keep it going. You're not going to rug. That's very different. Laundering and rugging are two different things in the crypto space. So, got your BLZs of the world. Looks like a freaking laundering op when you're looking at it. And then you've got your rugs, which is anything that Ben Armstrong touches. Like anything, not just coins. Like anything that man touches. So... I said it, so I gotta check it, right? Okay. BLZ, here we go. It's probably, I think I traded this as well over the weekend. I just don't remember. Yeah. Yes, I did trade this over the weekend. I traded it off the lows on some lower term time frame, and it did quite well on Sunday. There was no Bills game because it was Thursday, so I was trading and spending time with family. Didn't have a Bitcoin in 60 seconds because it has not done anything that I hadn't already talked about. This is looking good. I didn't realize it closed that high. Do I still have that position open? I know that I have like stops and take profits in already. They're already all set, so I don't know. Let me check here. Oh yeah, I left some on the board as I normally do. Cool. This freaking strong, man. 24.7 cents. It's trading well above there. It's going to turn the oscillator back up for momentum. It's above the upper second on the daily and 2-day. This is in all the areas we had previously talked about. This isn't the chart that I had for this, but it's like right in between some support and resistance levels that we had picked out on like the weekly, I believe, which it's freaking just going. It's going, man. This is, quite honestly, this is a legit breakout retest on this and a low reclaim. This looks good, man. This looks very good. It even took out this spike high on the weekly and this close open here and this low and this wick over here. It's already trading above this guy, and it's trading towards 30 cents, 30 and a half cents. Next area would probably be 35 to 40 cents, and maybe even go for its 50-cent region. You know, I wouldn't be surprised to see a pullback, but the daily already got that nice bullish reset after yesterday's close. Nice higher low structure. We might be seeing bearish divergence build. So this is the closest thing that I can equate this to is the Dixie chart. When we were talking, because I talked about this over and over again, the move is going to keep continuing until you see multiple bear divs in trend. And we didn't see multiple bear divs in trend until, you know, more recently, and now we're starting to see all those bearish divergences build up on the daily for Dixie. That's what you want to see for a lot of this stuff too. It's the same thing. I like 3 drives. Here are 3 drives. There's 3 drive patterns. There's 3 highs. You know, there's counts that go with that. Anything you want. But in this case, you know, you want to see in-trend bearish divergence. That's likely what we're going to see. And yes, there is longer-term bearish divergence, but we're talking about this current trend. That only compounds what you're looking for. And you can't fade a legit breakout. Look, people want to fade breakouts like it's just a bull trap. Bro, the people saying that were selling the low because they didn't play the actual run back down to the lower second and the base of support down below, right? Oh, it's a bull trap. You just got screwed again, because if it was going to UTAD, it was going to do it over here, and if it's going to UTAD, it's going to be a longer term time frame. So you're sitting in a loss if you shorted this high over here, and now it's above you. forcing you out. And then if it comes back down and takes out this low, then you're going to scream, "Oh, I called it," when you're already out of position, right? That's not you guys. I'm saying you. It's just crypto Twitter in most cases, because crypto Twitter, 99% of them are on the wrong side of the damn trade. And then they post charts like as if they had, no, I took this trade. I'm up 400%. Look at how much. Yeah, okay. On your paper account that you freaking aggressively entered because you lost all your damn money on your real account. Like, give me a break. It's one of the main reasons why I don't bother showing anything, because it's a bunch of bullshit, and you can fix those numbers any which way you want. You can even go in and edit them in the element inspectors, and that's what a lot of people do. So this looks good for more, as long as it's above the last low, by the way, at 1988. It's looking good for further upside. You do want to see it close, by the way. You do want to see it close above 28.86. Sound good? All right, guys. I think that's going to probably do it for today. We can go back and check on Bitcoin real quick here. I will have a Bitcoin in 60 seconds video today. Yep. Bitcoin trading back towards the 34.5 area. What's the 4 hour looking like for Bitcoin? Looks pretty good. Just have one spot position. Oh, you took it away. All good, buddy. Yeah. Look, if I see more trend lines, show me where your confluence is. Not just trend lines. Okay? Show me where your confluence is. Like, a trend line is a trend line. I mean, I can throw trend lines all over this right here, and it's going to break it to the upside and downside, but where's the confluence, right? What makes it tradable? What makes it, long-term tradable for me? Loom. I mean, I could take a look at it. I don't know what Loom is. I've heard it before. I've charted it before. I'm just finishing my coffee here, so oh gosh, that's a big old FU candle right there on the 4 hour. Holy crap. Yeah, I mean, most trend lines aren't worth shit. You're gonna find confluence with them though. I mean, that's the thing. But how important is that confluence? That's really what you're looking for. So if you show me trend line stuff, just make a case for it. Like, what is the importance of this trend line, and why is it important to you? And then I'll probably still proceed to destroy you for putting a trend line on your chart. I'm just kidding. I'm just messing with you. No, I mean, I have plenty of trend lines that I've shown you guys over the years. So spot entry is 10, or like 10.5 cents. Okay. Okay. This is, I mean, bro, this is a big drawdown. This is bearish right now. But does it have a chance to build structure? Yeah. Yeah, 10.01, 10.1 cents. It's looking okay. What I don't like is that it swung this low aggressively. To be fair, it broke out of its local bottom, and it did get bought up pretty hard, and that's around 11.7 cents. I would say as long as this thing's staying above, 9.5 cents, it's fine. Oh dear, I did not scroll out and look further. Yeah, I can't hate the chart. It's not terrible. I mean, it was down only and then breakout, and now it's trying to set, some structure in here. It's a little too new on this chart. It's a little too. I mean, the crazy thing is whatever was going on over here at like 40 to 50 cents. Like to pin 50 cents even, that tells me this is what do the crypto Twitter guys call it? The cartel. It's a cartel coin. It's not really a cartel coin though. Maybe it's cartel adjacent. But you know, I can't hate that it's trying to turn itself back up, but it seems like it might be capped in the under 20 cents for a while. This seems like, man, yeah, 36 cents pressure down on the weekly. You can't get anything more. I mean, maybe a 2-day. 2 days about ready to turn 12.76. It is currently below there, but you know, it's got some time to try. I don't hate it. I don't like it though, to be quite honest. As long as it's above 9.5 cents, it's probably good to keep testing higher. But man, that volatility, somebody's effing with people. And quite frankly, I mean, after this extended run up, that's not too crazy. Just got to search Twitter and see who tweeted right at the top about buying it, and then you'll know that it's an actual scammy coin. Just go on Twitter and type in Loom and just search some of the charts that you saw in the past. What was it? When was this? Since Saturday. Just look for Saturday. See who was tweeting about it right at the highs. Because I bet you they were searching for exit liquidity. And to be fair, they probably needed it after the extended run to the upside. I mean, this is a 4-hour, and this is a very, very structured, extended move to the downside. And then now it's, you know, get out, reposition, and then, you know, make some money, let it consolidate, maybe spike it up again, make some more money. From the daily, I mean, it's got a chance, but just be careful with it. I don't like the way that this looks. It looks like somebody's, you know, got a bot on it. Like they got a lower term time frame TWAP and a higher term time frame TWAP bot on it. And they probably hold most of the supply. So just be careful. Yeah, I'm looking for that. It's 20 cents. Yeah, I mean, look, you might, it might get to 20 cents. It might stay under. So just be careful with it. It looks like one of them scammy coins. I don't know what it does either, so I don't know anything about it, what its projects is, what chain it's running on. It just reminds me of I don't know if you've ever heard of the game Loom. So and if you haven't, it was a graphic adventure game. You can pick it up on Steam. Here. This is what it reminds me of. This is all I can think about now. And now I want to log into Steam and actually play this. Okay, you're making me want to play Loom again. And just so you know, great game. Great game. Anyway. All right. I think that's going to do it today. Thanks for hanging out, everybody. Hey, yeah, for the guys over there that are going to be testing, did they need anything from me today? No? Cool. I'm going to go hang out. You guys have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe and, of course, stay safe. I will have a Bitcoin in 60 seconds video later today. I might look at the weekly instead of the daily, but well, I'll make that decision after I see the daily close, actually. And then we'll kind of see where things fall. And yeah, we'll go from there. Yeah, and for all of you that are hanging out in the various chats, I appreciate you hanging out and help me test things. We are trying to get a Discord server up and running without with some guardrails in place. Yeah. So I appreciate you guys helping out over there. And for those of you who are all hanging out in YouTube land, I appreciate you for hanging out, even if you didn't come down and join us in the chat. But for those of you chatting as well, thank you for showing up, hanging out, and I'll talk to you guys later and Wednesday. Take care. Landy out.
The Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army.